Maverick traders, welcome out to your market roundup for October 27th. Corey here with you. We're always going to take you through meaningful news. There's a lot on tap for this week in terms of economic reports. We've got a Fed meeting, we got plenty to keep us busy, and we're going to highlight some great setups that are out there in the markets right now.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
So let's start by checking out the markets, and the week started off on the right foot. The Dow, S&P, NASDAQ all up over 1%, and it's interesting, we thought there would be a little breadth spilling out, other sectors performing, and that's certainly true. The market breadth, the amount of stocks upward moving has increased. However, let me be very clear that from the standpoint of leadership, it's still the leadership group is the NASDAQ. It's still those big names that are the outperformers. Gold has been giving back some of its gains, down another 2.85%. Frankly, it became unsustainable. It was in that series, that kind of level 4 exhaustion where things got a little too good and a little too far stretched. Daily news, we have a framework for a potential U.S. and China trade deal. The expectation would be that China would back off on rare earth requirements and that the U.S. may delay or even cancel some tariffs. In addition, we've got rate cuts coming. The Fed is expected to cut by 25 basis points on Wednesday. Along with that, they'll have a statement. They'll have some indication as to whether or not they will continue to cut rates for the foreseeable future. Advanced decline line 50-50, which is interesting, right? Only half of stocks advancing on a day where the markets were up quite a bit. So today was not great on the breadth side, but the 50-period moving average has steadily started to improve after a consolidation a couple of weeks ago. We're back to about 50-50 right now. So as we look at this chart, you can see we're just now breaking out. And we had touched on this last week when I did the market roundup on Monday of last week. I said, uptrend still intact, short squeeze to continue as being the most likely outcome. And that's what you're seeing. When you're accelerating at this pace with a gap up on Friday and then a further gap on Monday, these are short squeeze elements. And what a short squeeze is basically you have to think of who's on the right side of the trade, but who's on the wrong side of the trade. And the wrong side of this trade is the short. And the short trader is saying, boy, this is too much pain. Either their stop losses are triggering them out or they're covering shares, but the twisting of the arm becomes a little too painful and they're crying out uncle and saying, no mas, I've had too much. I can't take the pain any longer. How far do we go? Well, it's debatable, but certainly we're starting to get extended from the moving averages, but these have a way of acting very, very strong, kind of a firework finish where you surge and then you could easily have a reversal that's quite steep as well. Go look at the gold chart, look at the GLD chart for an example of what a boom and bust, level 4 kind of sequence happens within an exhaustion. So as we look at the NASDAQ, again, still the leadership group, and this is where I thought that we would have the rally filter out a little bit more. It's doing that somewhat. There's a lot of stocks performing. GM's been on a tear and so forth, but it's still led by the biggest names, and that's where the money is, that's where the growth is, and you saw that especially today. This hadn't been true as much on Friday, but certainly today. Google, Tesla, Apple, Nvidia, it was the biggest and brightest, were the greenest names out there. There's little pockets of weakness, certainly some weakness over here in the consumer defensive area. Newmont Mining, which is going to be heavily influenced by the downdraft that's happening in gold right now. Ford being left behind where GM's been really performing. So there's some little pockets of weakness, but ultimately this is a stronger market environment. Now, on the bullish trade side versus the bearish trade side, let's look at some candidates. The problem that I will say with these candidates is there's earnings, and some of these report earnings this week, and that's just something you're going to run into a lot. But Google's chart looks fantastic. Nice multi-month base it has recently broken out of. If you were to just look at it from a trading standpoint, if there were not earnings, this would be fantastic. A little cup and handle type of dynamic breaking out. And my guess is that earnings will come in pretty positive, but that doesn't mean the stock will go higher. So if it weren't for earnings, I'd be even more optimistic on that. NEE, here we're in the utility space, really, NextEra Energy, and we've been in a basing pattern. This too reports earnings. You're just right in the heart of earnings, so that's a thing. Maybe the earnings will be the catalyst to break us up and through, but if it weren't for earnings, I'd be ready to pull the trigger immediately. If you trade through earnings, have at it. If your system does not trade through earnings, you may want to wait until post earnings to place that trade. Now, on the bearish side, chart like Allstate just looks like trouble. Here we're low basing, consolidating after a deeper dive, and the insurance play is just not a good one right now. Across the board, Allstate, MetLife, all of these stocks are downward trending. Allstate showing no signs of stopping. One of the biggest insurance players is Berkshire Hathaway. They report their earnings this weekend, and those are expected to take a little bit of a hit. Here's MetLife, MET, same thing. Drop, consolidate, and probably going to go through another cycle and further selling. So looking at it from the standpoint of opportunity, insurance plays to the downside look like an area to at least initiate a trade or two, depending on how your system works. Now, the uptrend is intact. The short squeeze is in effect. I would caution a little bit that at any point here in the next week, maybe 2 weeks, we could see a really big drop day. You know, one of those days where we just had one, right? A few days back, and then the market's recovered since. And we might see another. It's not uncommon for you to kind of drop heavily. It shows that people are willing to sell, and there's kind of, just riding the wave. And now we've ramped up out of that, and then maybe another big sell-off day, and they're less inclined to buy the dip. Now we'll see how that works out, but usually we call that a distribution day, and they come in phases. So we had a big ugly red candle in the S&P, and now we've recovered up out of that. You may see another big distribution day up here in the not too distant future, and they come in waves. If this market is going to roll over, don't be surprised if some distribution days, maybe a day where the S&P's down 2-3%. So the point is if the S&P's down 1% on the day, I'm not going to rush in to buy that dip, because I suspect it might grow pretty substantially through that day, and that might be a little bit of a turning point for the market. As long as we're upward trending and we're not getting a big distribution day, we stay the course, we stay more bullish. FOMC meeting on Wednesday, and earnings, like we said, it's the who's who of earnings right now. You've got Apple and Amazon, Boeing, Chevron, Eli Lilly, Google, Microsoft, UNH, United Health, that's Visa, ExxonMobil, just a lot of different companies across a variety of sectors. Plenty to keep us busy. Hope you enjoyed today's market roundup. Have a great week, everyone. We'll see you next time.